Okay, good morning, good evening, good afternoon. How's everyone doing? Okay, I hope you all can hear me just fine. Let me just see as everyone gets into the room. One moment. Okay. Um, Let me just get the rest of the guys in here as well. Sorry, one moment. Okay. Okay. Voice and audio all clear? Shall we get started? All right, how are you guys? Good to see some familiar names. Robert Dorsey, Costa, Arul, Jerry, how are you guys? Welcome to the room. Welcome to the room. All right, guys, so today is 23rd of April, 2024. I wanted to do a webinar for you guys to go over some of the techniques on indicators. How do you actually use an indicator that will be in your favor? Okay, how many of you guys in this room have used indicators in the past where it's a hit and miss, or sometimes you use it, it works fantastically to the pip, and then sometimes you use it, it's as if the indicator never worked to begin with? How many guys in here have actually experienced that? Okay, hi, how are you guys? You guys, welcome to the panel.
Hello, hello.
Okay,
Hello.
how's it
Hi.
going? So we got Tony, Lucas, Mariana, Ryan, everyone joining in from different parts of the world. Thank you guys for taking the time to be here, because I want to use your own experiences on what you know about indicators, and I want to see if if indicators was the way to go, how would you still trade them today? Let's forget about all your experience you have with trading. Forget about the years and years of training that you've had. What if I put you back 5 years, 10 years, or whenever you started? I put you back within the first 6 months of your career. I wanted to go over that a little bit today. So let's start off with some of the questions. Particularly, I wanted to make this a multi-part series. Today's series, I actually want to talk about Fibonacci. Fibonacci. Now, Fibonacci is a very, very popular tool. How many guys in this room have used Fibonacci before? How many of you guys here on the panel used Fibonacci before? Yeah? Okay, good, good, good. Yeah, because why not? It's super cool. Like, the world uses Fibonacci, a pineapple uses Fibonacci, sunflowers use Fibonacci. Why not your bank account use Fibonacci? You know, it's like, come on. If it's a universal truth, then that universal truth better take me right next to Bill Gates, right? So I want that universal truth to be with me and show me how to do things so that at a click of a button, we can do this right.
Mhm.
So let's start with the ideas of, if we're going to use Fibonacci, how do we do it? So I'm going to display a screen to you guys. Okay. And we're gonna go through it. I have the chat open here on the side so I can see everyone's messages as well. And let's go through this one by one. One by one. Okay. Okay. I'll come back to CAD Yen. By the way, please remind me, guys, that I do need to close out my CAD Yen. Sorry, I should do it this way. I do need to close out my CAD Yen at 50%. Yesterday, the targets were reached at 113. I saw some comments coming in about that. So I'm going to be closing 50% of that today while we're doing this thing live. Let me just get my video.
How much P&L are you running on this right now?
Right
200.
now, I'm actually running on this. I'll tell you. One moment.
Has to be like 150 at least, right?
No, 145. Yeah, 145,000 on this.
But that's actually not true, right? I
No, it is
think
true.
I think you're making more than this.
You're talking about the secondary edge.
Yes.
Yes, yes, the Chewbacca. Right. So yeah. So yeah. So There is a secondary angle that I'm playing with this. This research was brought to my attention by Tony. You know, you got to give credit where it's due. Tony brought it up to me and saying, Navin, if you're going to be going after the yens being the lowest interest compared to the rest of the world, there's an opportunity there during holding a position overnight and you get interest on it. CAD has a pretty decent interest rate compared to the yens. So every night that I hold this trade, I get 500 something dollars. So for the last 1 month of me holding this trade, not only do I have the capital gain, which is $145,000 running right now, but I've also made it close to $11,000, $12,000 just because I have the trade.
Nice.
So I got interest on the trade as well.
Yes.
Okay,
yes.
so a good 5 to 7% of the revenue additionally came just by me holding this position. It's not something I normally talk about because it's not something easy to explain and go over, but it's basically a carry position. And a carry position, either you pay interest or you earn interest. So, you know, that's just how it works. So you guys can research into that. Perhaps we can do a webinar on this sometimes in the future as well, explaining how your long-term positions you should be carry positive. So that way you also, in an easy way to put it, you make rent money along with you trying to make the property go up in value, but you should make rent while you have the property. If that's the easiest way for me to explain it.
Sounds interesting. Yeah.
Yeah. Okay, good. Okay. All right, now let's move on to a chart. Okay, I kept this chart ready for you guys.
Okay.
No, okay. It's like, okay, I've kept this chart ready for you guys. I'm gonna take my Fibonacci tool. This is a Euro Aussie chart from the 21st of March. Okay, 21st of March 2024. I want you to tell me, how do I draw my Fibonacci on this? There are multiple ways, so don't feel that you need to do the exact way that that the world is doing it. Whatever comes to your mind, however you've learned it, how do you do it? I want to know.
So based on Fibonacci is about percentage. So I would say a good way would be to have a starting point and an end point.
Yeah.
And we are interested in a price of a certain percentage discount, basically.
Yeah, but
So
are you looking to buy or to sell this one?
You guys tell me.
that's-
That's the question for you guys. You tell me. I'm giving you guys the ability to use the Fibonacci tool. If I give you this chart, I want you to use that Fibonacci tool, and you tell me how should I use it.
Well,
Yeah,
if we bring it back to when I first got started, I wouldn't even think of all the percentages. I'm just gonna start from here, drag my Fibonacci up to here, and just see, you know, where price actually comes to, and that's gonna
Okay.
be mine.
So I do this, and I drag it up to there.
Yep.
Yep. Okay. And then what now?
Just hit the buys.
No, first you have to wait for it to come around 61, like 0.618. That's actually a good pullback. It's not
This one here,
too deep.
61.8%.
Yes.
Yeah, that's the
Not
golden
like
rate.
too deep, but it's not too shallow. It's like something in between, you know?
Okay, so this one doesn't really touch it exactly, but does it? It looks like it has magical powers, doesn't it?
Yeah, the reaction was
Okay.
quite from there, yeah.
All right, so 61.8%. Okay, now, Tony, I want to ask you this. Are we Fibonacciing this thing this direction, or are we Fibonacciing this thing this direction? Which direction are we Fibonacciing this thing?
yeah, I thought about first this because it looks bigger. But then I thought, okay, but this looks also quite interesting. So maybe it is I have to layer them, and I place one from here to here, and then one from here to here, and find something that is lining up again.
Okay, so you want multiple things to line up. Okay, there to there,
Yes.
and then one more you said from there to there.
Yes, and if a line lines up like this one here, where I can see they are getting close to each other, this might have more value.
Okay, so this one is a 78.6% together with a, what is the other one?
Overall, 0.6.
0.618 around.
Oh yeah, 61 point, okay. So that tight area. Okay, fair enough. So what's the game plan? Once that happens, so the Fibonacci is telling you where you need to make the money. You're layering these two things on top of each other, and then it's telling you what you need to do. What now?
You have to wait for a reaction from the area. You cannot just blindly hit it.
So I don't
Sometimes
buy
you
it
just hit
here.
it. You can just hit it as well, because once it touches that 61.8 as well, you should get a reaction.
Yeah, but it
Okay.
doesn't always react. Sometimes it just go through it. So you need to have that confirmation that it's going to react from there.
Okay, so
But-
let's play it safe and say if it responds, then we buy.
Yeah.
Is that at least will that keep us safe and make sure we make some money?
Safer.
Okay, so that we buy it as it's going back up from here.
Mm.
Okay, good.
Oh, hold on. There's one more thing for it to
Okay.
be safe. If
Okay.
you from here to here, then that's gonna tell you don't want to buy it here because it's coming close to another Fibonacci.
Ah.
You mean on the sell side?
Yeah, if we look at the Fibonacci from here to here.
Okay. No. Okay. Now you got me confused. Okay. The reason why I'm a little confused here is if I put these away for now. Okay, Mariana, we'll keep this aside for you. Okay. Who layered these? Mariana, did you layer these, Mariana, or Tony? You layered them. You layered them, right? Okay.
Yeah.
If someone does it from here to here, that bottom part there, these areas, then this comes exactly to 78.6%. So that individual says hit, sell, go. And you guys are telling me hit the buys because of double layered confirmation plus a reaction from there. When I have someone buying, someone selling, does that mean maybe I should back off and it's not safe? Like, is there a filter for this to make sure I don't get stuck in this?
So maybe, because when we were drawing this one, we can say, okay, this is our blind entry, but then we should be aware of these areas. And if we see a reaction from the seller side area, then we get out.
Okay. All right. I want to introduce you guys to Grandpa Bob. Okay. I want to introduce you guys to Grandpa Bob. Some of you guys already know him. Actually, all of you guys in the company know him because Grandpa Bob is mean as shit. So I'm going to introduce you guys to Grandpa Bob, okay? And I'm going to take a moment and talk about this. I want all of you guys who are attending this thing, I want you guys to sort of understand that all of the guys on the panel, they're doing everything in their power to make this Fibonacci thing work. Is that correct? Is there anything missing that you guys want to add that to make sure your Fibonacci is the real thing? Anything you guys want to, use to strengthen it?
Yes. If you can find a confluence, like if you can find another indicator that says the same thing, then I think that gives you like extra confirmation that it's going to work. When you have like different confluences saying the same thing,
Yeah.
I would be able to trust it more. Like, let's say that RSI at this point is at like overbought or oversold. That could be.
Okay, so let's do this. So if I do from here to here, from top to bottom, okay, I have an SNR area here, right? I have overbought areas on my RSI. I'm going to draw a additional Fibonacci on top of it to get that additional confluence area saying, okay, I have SNR and 78.6%, and I have RSI overbought. So
Yeah.
there's like 3 things now. And it responded. There was a red candle rejection. It responded. Hit it.
Yes.
Yeah.
Yes.
Looks good.
Okay. All right. So let's take a moment, gentlemen and ladies. Let's try to understand everything that everyone here has been saying. Again, these guys are extreme professionals, but remember, I put them into a seat of remember how you first started as a trader. Okay. And they're giving me everything they used to do. I used to do that too. And I'm sure all of you guys do that too. Is that right? Right. So we look for tips, right? Our whole cycle on trading is tips. Someone just tell me what to do. I don't really trust someone, so an indicator will do. Okay. So now that I'm looking at this indicator, in case it doesn't work, I'm going to layer it with another confluence. In case that doesn't work, I'm going to layer it with another confluence. In case that doesn't work, layer and layer and layer and layer. Okay? We're going to layer the hell out of this. We're going to make a tiramisu out of this thing. Okay? With multiple layers. It's a lasagna. Okay? Okay. Now, as we make this sponge cake together, what I want to understand from you guys is Mariana said, I want to do this thing because the Fibonacci says this. There was 0 research. There was 0 understanding of what's going on. It's basically, you guys all ever had that uncle or friend or neighbor who said, hey, Nike's going to go up tomorrow. Nike's going to go up tomorrow. You better buy some Nike. I got a tip. An indicator told me Nike is a buy tomorrow. What is Nike? I don't know. I don't know what's Nike, but something is going up tomorrow. I should do something because I don't want to be left behind. Mariana does a buy on Nike, and she had bad experience with it. And then she's told Lucas. Lucas is like, I'm smarter than that. I'm not going to do that. I'm going to layer it on top of each other. So when my neighbor tells me, buy Nike, you think I'm stupid? I'm not buying Nike. But then a second neighbor told me, hey man, Nike's going up. Maybe I need to buy Nike. That's confirmation. That's confluence. What is Nike? I don't know. I don't care. I don't have time. But 2 neighbors told me Nike is going up.
Yes.
Tony is watching all of this from a distance, and Tony's saying, these guys are idiots. You got to layer deeper. Layer. Let's go. Slap on a few more confirmations. I just watched CNBC, and they said Nike is coming out with the new Jordans. What's a Jordan? Don't know. But it's on the news, and 2 neighbors have said it's going to go up. We're going to buy Nike, baby. We're going to buy Nike. Now, I want all of you guys to take a moment and understand, is that how you want to build your career? If in your career, if you've ever experienced that you made money one day and then you lost it the next day because your tip was unreliable, then shouldn't you get away from the tips? It's just a question that I want you to think about. I don't want you to do anything about it. Okay? You haven't done anything about it so far. Just think about it. Just think about it. If the tip isn't working, then you strengthen the tip. If that's not working, you strengthen the tip even more. But at the end of the day, what you're looking for is stability, is it not? You're looking for stability. If I can do it once, can I do it again?
Mm-hmm.
That's what's important. The word consistency is thrown around in this industry, but it's actually a real thing. Because consistency revolves, it's very important to those who run on tips, right? Okay, well, I'm using the word tips, but it's actually another form of an indicator. It's someone tell me what to do because I have no idea what I'm doing. Isn't that what an indicator is? Right? All of you guys here on the panel?
Yeah.
Yes.
If I change the word Fibonacci to RSI or MACD or moving average or ATR,
Still the same thing.
Yeah.
still the same thing.
Mm.
Still the same thing, right? So however you layer it, you know, one after the other, you just pile them up. However you do them, it won't make any difference, but there is a way. And this is why we're doing this webinar today. There is a way. There is a way. So let's talk about this a little bit today. Okay. All right. Okay. Oh, and I want to keep Grandpa Bob here on the side. Okay. Grandpa Bob is very strict. He's ruthless and he's very mean. So be careful of Grandpa Bob. Okay. All right. Now, I want you to look at this as the prices are dropping. Dropping, dropping, dropping. Okay. I want to ask one of you guys this question. All of you guys, okay, I'm going to test your knowledge. Okay. I'm going to test your knowledge. Okay. What is an indicator? If many of you guys are saying this out loud or typing this in the chat right now, saying an indicator is something that follows the market, you get 1 point for your knowledge. If you say an indicator is nothing but an instrument that is lagging, you get 1 point for your knowledge. Okay? If you say an indicator is a waste of time, perhaps, I'll give you 0.5 points for your knowledge. But at this point, I give you 0 points for understanding. Knowledge means nothing without the true application of it. Knowledge means nothing. If I ask you and I say global warming, and then you come out here and you give me stats and data and data and data, and you've never gone to the North or South Pole, it's just knowledge. You're just repeating what went into your ear. This makes no difference. You want real life experience, first-hand account experience to say my knowledge is backed up by this experience. 99% of the knowledge is someone trying to prove, I know a guy and he used to be, and I know a girl who used to be. You're working really hard to prove that you know what you're talking about. Why don't you spend that time to actually know what you're talking about? Takes the same amount of time, but it's boring to research, right? It's boring. So we need to talk about that a little bit today. Is there a shortcut to indicators? Let's talk about that. Okay, let's talk about that. So indicators, there is a shortcut. Okay, if the markets are going down, think of it this way. I'm going to change this. I'm going to call this Nike. Okay, I'm going to call this Nike. All right, so no Jordans are coming out, and everybody seems to be dumping the stock of Nike because maybe they fired a CEO. This is just an example, okay? I don't mean do this and go and buy and sell Nike. Not like that. It's just an example. So this is Nike, and they fired the CEO, and everyone's panicking, saying, oh my God, this is not good. Sell the stock, sell the stock, sell the stock. Everyone is selling the stock, okay? They're getting rid of it. And as they're selling the stock, some people buy it. Some people buy it. Now, there's a lot of people here, a ton of people here watching this thing, and they call themselves traders, and they say, oh, I think that's the bottom.
Yes.
I think that's the bottom. So what we're going to do is we're going to draw from here to draw to there, draw from there to draw to there, like this. And they say, got it. I now have my Fibonacci numbers. I've got a 50%. I've got a 61.8%. I got a 78.6%. You guys here on the panel, which one do you guys like?
The better one, the higher percentage.
Why the higher one?
So for one, it seems to work the best. And the second is it's a great price.
Okay, it seems to work the best. Where is that information coming from?
Or I can see it here.
You can't see the future. I mean, like we just went up a little bit here. You can't see the future just yet. You don't know it's working.
Okay. Yeah, then I have this level that I can draw as well. And
So confluence,
yeah,
that double layering
yes,
stuff that we like to do,
yes,
right? Okay, so there's a level given by the Fibonacci gods, but at the same time, there is a SNR given by the SNR gods, right? So we've got two gods saying, this is the level, baby. All right, Tony, how much money are you going to make from this thing? Before the trade even begins, did you pull out the calculator and did you calculate how much money is going to come out of this thing?
no.
Okay. But many people do.
Okay, but then I'm preparing even better. Okay.
Okay. Okay. What about you, Mariana? Which one do you like?
I agree with Tony because of because it looks like a good price, like 0.7%. It's a little bit too much. It's like too deep. I prefer when it comes actually to 60. But if it came that deep and you have an SNR area, then it's like, okay, you can trust it a little bit more. And like I said before, you have like an overbought on the RSI. So
Okay, so you're adding the RSI to it as well. Okay. Ryan, which one of these percentages do you like?
Well, I always taught to use 61.8 because it's the golden ratio. So that's an important
Golden ratio?
number. So around that area.
Okay.
It's good.
Okay. Lucas, do you have a preference?
I'm gonna go with the 70%, same reasoning as Mariana.
Okay, so confluence, you're attracted more to that. Ryan, 61.8%. If you're a supply and demand guy, you got your confluence through supply and demand. There's a supply level in that area as well. Right? So you got that going for you too. Okay, so there's confluence, there's overbought situations on the RSI. Now, I'm going to move you away, all of you guys away. Okay, this is the panel has decided on this is what they want to do when this market's going down. Nike has been dropping. Someone bought, they found the bottom. They're assuming that's the bottom. Okay, they're assuming that's the bottom, and they drew this Fibonacci thing, and they're like, all right. And they all have their own individual opinions on how to do this thing. I asked this question on purpose I want you all to see they all don't say the same thing. They all say very different things. They all have very different reasons. And all of those reasons are not related to Nike. Not one is related to the product. It is just Auntie Sally told me I need to buy Nike. And my reasoning is Auntie Sally's a nice person. Why would she lie? My neighbor, Samantha, told me I should buy Nike. Samantha's been our family friend for generations. She has no reason to give me ill intentions and ill tips. And Samantha's a pretty smart lady. She's an accountant for Joe Schmo. Okay, so she must know something about Nike. That's two tips from two people smarter than me. You guys see where I'm going with this? At what point was the research done correctly and has nothing to do with Nike? Adding the RSI, adding the support resistance has nothing to do with Nike. Let's add a little bit more. As the stock gets bought, did people sell the stock afterwards? Here, did the stock sell? All of you guys here on the panel, did it sell?
a little bit.
A little bit.
A little bit, right? And then what did people do? What did the public do?
They bought more.
They bought more. How much more?
A lot more.
A lot more. Now,
And quicker.
why would the public buy so much more when there's a golden ratio coming up?
They're not using the Fibonacci, obviously.
So when I go to the Nike store, I cannot buy my Jordans because someone did a Fibonacci in their house and the stock's going to drop? Am I allowed to buy the Jordans? So where I'm trying to understand is at what point is playing this game logical and illogical? So how do we make it work? Let's say, but Navin, I've spent 20 years of my life with indicators. How do I not do it? Well, you don't have to not do it. I'm going to show you how to do it. Okay? That's the whole purpose of this webinar. That's the whole purpose of this webinar is sometimes your habits are so ingrained that you can't get rid of your habits. So we're going to have to work with them. We're going to have to work around them. Okay? So let's do that. Let's do that. If someone bought a little bit here, I want you to focus on how many candles went up here. And here.
Uh-huh.
So the
Second time is
second
much
time
quicker.
around, it went faster, right?
Yeah.
And in less time. Within 3 hours, this thing went up a lot.
Yes.
But within 6 hours, this guy couldn't do much. So that means the public is buying the Nike stock aggressively. If they're buying the Nike stock aggressively, that means they find it as a good deal. Do you really want to sell if people are finding Nike as a good deal and they're buying it up? Where do you make your profit? How do you make your profit generally? If you sell, what must the market do for you to make money?
Give further discounts.
Must go down.
It must go down. But if people are so aggressively buying it, is it really going to go down? Let me take you into a little different scenario here. Okay, keep this in mind here. Okay. I'm going to show you something similar to it. Okay. All right. Prices go from here to here. What's the speed?
Pretty fast.
High speed. Yeah.
High speed. And then what happens?
High speed down.
High speed down. And then
High
More speed
up.
up. Yeah.
more speed up. Did we ever cross this area, this price?
No.
No.
Did we ever cross this price?
No.
So what essentially is happening is they're negotiating. So whoever's buying it, they're saying, you know what? I don't want it anymore. And then it's crashing. It's crashing because someone doesn't want it anymore. It's not crashing because it's reached some golden ratio. Right? You got to keep that in mind. It's rising because someone bought it. It's not rising because it's at 92% ratio.
Mm-hmm.
Does that make sense? Someone is buying it. In this process, when it goes down again the next time, how does it go down?
Very
Slower.
slow.
Weaker.
Very
than-
slow. When it goes down that slow, that means people are less likely to get rid of it compared to before. When you see situations like that, that's the time when I would start saying there might be a chance things would be in a buy mode. And if things are going to be in a buy mode, use your Fibonacci tools in a buy look. Use your Fibonacci tools in a buy look. When these buyers come up aggressively and they start taking over the sells, I would say now use it. Use your Fibonacci at that moment and saying, all right, what do we got now? 61.8%. Now, this buy that launches upwards and still doesn't make a higher high. Tell me, golden ratio buy? Is that why it went up? Did people line up outside the stores overnight waiting to buy Jordans because someone called everyone one by one saying, hey, golden ratios tomorrow?
No, there's demand.
There's demand. If I look at this, I don't have anything going on with the RSI. I don't have a SNR because my SNR is here, here, and here. I don't even have an SNR. But yet it still goes up. And it goes up from a Fibonacci number that you guys like.
Mm-hmm.
It works. Fibonacci works, but in the right context. RSI works in the right context. MACD works in the right context. This is the thing that I wanted to use this webinar to sort of make you guys understand that if you understand the context, you can make your indicator that you currently use turn into a golden weapon, not the golden ratio, right? You can make it work. You can make it work. All right, let's take a look at the same thing with the RSI now. We're going to switch it up a little bit to the RSI if you guys don't mind, yeah?
Yes.
Okay.
Let's do it.
All right, here we go. Full speed down. Okay, what does that mean in terms of price action? What does that mean? Full speed down.
A lot of sellers.
Lot of sellers, right? That's right. Lots of sellers. Now, if I have a Fibonacci doing this from here to here, and we are at a 61.8%, should I buy?
And you are.
No. Okay, so that's it. Rules. If you want rules, let's do rules. Rule number 1: don't buy when something is crashing in front of you. It's crashing for a reason. It's not crashing to say, oh, I got that price. Here we go. It doesn't do that. It doesn't do that. Okay. All right. Now, can you guys remove this white line? Who's got this white line on my screen?
Not me.
Okay.
Ah, that was mine.
Yeah. Because I'm confluencing with that white line. Okay. Okay, now I'm going to remove this. So we have a massive drop here, followed by do this. Extend this area out that dropped like that. And tell me, did we go above?
No.
Did we go below? How about here? Did we go above? Did we go below?
Yes.
Okay. Why did things go back down? Did we know it will go back down?
Well, the way the seller looked in the first place, it does look like it could go down.
Good, good. So first, you identify him. How does he look? Why are they dumping that stock? Why are they dumping this Euro Aussie? That's question number 1. Let's say you've never done any research in your life, and that's okay. That's okay. All you're interested in is they're dumping it. Interesting. I want to know if they're going to dump it again. That's all I really care about is something's happening. I don't know what is happening. I didn't go to school for this, but something's happening. Samantha, Lisa, shut up. I don't want to hear you guys. Okay. Okay. So you lock them out of your house. You don't let Samantha and Lisa in the house. Okay. Things are dropping dramatically and then prices begin to pull back. Tell me about the pullback process.
I would say it's looking strong, but not as strong as the sellers.
Okay. Only when you compare it to this, you're like, oh, it doesn't look that strong. But what if I compare it to each other and I say, this thing is going up. It made a new high. Then it looks so dramatic, right? Oh my God, buyers are going up. So then what do? Do I do it like this? I draw Fibonacci from here to here and I say 78.6. I need to buy this. I sell the house, sell the car, sell the grandma. I need to get money to buy this thing. Will that buy work?
No.
It doesn't work. But answer me this, is that 78.6%?
Yeah.
Yeah,
It is. And the way it looks, it does look like it's going to respond and go up for like a rocket, but it doesn't. And it never will in this context because it's illogical. It's illogical. Let's explain the logic why. Let's explain the logic why. So in this concept, when the markets are slamming down and the buys are coming up like this, now notice how the buy goes up. It goes up, down, up, pulls back to SNR, goes higher. Right? So it's up, down, up, pulls back into SNR, says hello, and then it goes back up. Right? So it's doing the market rhythm. It's doing things you've been trained to do. SNR hold, it bounces, things go up. Okay, great. Great. Draw your Fibonacci. Draw your Fibonacci stuff. And you're like, okay, I'm at 61.8% golden ratio. Let's say you draw your Fibonacci from here. If you draw it from there, it's like, whoa, that's perfect Fibonacci. But let's say you forget to draw it like that and you draw it a little bit lower. Okay. Okay. Let's say you drew it like that and you're like, well, I don't get that perfect, absolute precision preschool stuff, right? Okay, fine. What happens the next time it's at SNR? It tries to go up, fails. That's your sign. They tried to go up. It's reverting back to whatever this is. And it happens to be at 61.8%. I'm going to remove this and saying, did you need that 61.8%?
No.
You don't need it. You absolutely don't need it.
Yes, that's true.
In this entire process, your RSI was above the 50 line, which means it's on its way to being overbought. Doesn't it sound like now I'm just pulling stuff out of a hat? It's like another Samantha knocking on my door and saying, you gotta buy Nike. Shut up, Samantha. Stop bothering me. It's like, okay, does that make sense?
Yeah.
Yes.
Okay. So at the end of the day, no matter what happens, there's a ton of indicators out there. If you start to understand the logic of people buying and selling, use any indicator you want. They all work. This is why no matter what indicator you use, go into here and then go into technicals. I can promise you, I can sit you down in front of me and I can let you pick any one of these indicators that you like, any one from the past, from the present, or any new indicator that's going to come out into the future. And I will show you a place where it works and I will show you a place where it doesn't work. This is guaranteed. This is the situation of how an indicator operates because the indicator takes into account data that is fixed. It cannot do variable data. It can only do fixed data, which means it will calculate something from the past and saying, this is what I think. Okay. So it will only give you based on what it's seen. But the thing is, it won't be able to tell you if the intention of the public is to buy or the intention of the public is to sell. It can show you what the intention has already happened, but it won't tell you the intention of what may happen again. That won't tell you. So all indicators are like the news. They can never predict the future. They can only tell you the past. Does that make sense?
Yes.
Now, based on everything we've discussed, guys, what has been your experience when you came from the indicator world into this side? You know, one by one, I want you guys to tell me What was your epiphany? What kind of breakthroughs did you have? Or what kind of struggles did you have when you were leaving the indicator world and coming to this side? Or if you're still with the indicator world, but now you just use it better. Like, where are you guys right now? Tony, can we begin with you?
Yeah. So leaving the indicator behind is like I'm still comparing, and then it's like, okay, how does price action work? Okay, how does my indicator look? And then it's comparing each other. But it took some time, and then over time it's getting better. So now it's maybe a good information, but everything else needs to be on the chart itself.
Okay.
So
Okay.
yeah.
Mariana, for you?
Okay, if I'm very honest here, I was never a big fan of indicators. I learned first with the indicators, but I always saw that situations when sometimes it works, but sometimes it doesn't. And that used to bother me a lot. And then I found the urban forex, and I saw that it's mostly based on technical analysis. Just watching the charts, I was very happy about it. I was like, yes, I found myself here.
Okay, good. Good. Lucas?
To me, indicators are like training wheels on your bike.
Yeah.
You need them in the beginning, and then once you're a little bit comfortable, you take them off and you ride without them. But the thing is, we have our mentorship program and all that kind of stuff, right? So we have a lot of students that comes in and they ask about, how do I use indicators? Why does it work? Sometimes it doesn't work another time. The funny thing is the way you were explaining in the webinar, if they understand a little bit more about price action, and if they piece it together with the indicators, it actually works wonders. So I don't think we need to say anything bad about indicators or anything like that. But so long as you know what you're doing, so long as you know you're buying Nike and the reason for buying the Jordans, then you have a pretty good chance.
Absolutely. Absolutely. Good, good. Ryan?
Yeah, for me, starting off, I went through a lot of different indicators and strategies, and some of them worked really well as well, made profits through them. But just I never found, I was always uneasy whenever I had to start putting on bigger money in trades. I never had the confidence to say, why should I suddenly put some large size on this trade just because this indicator says I need to do this? So for me, I was missing just that logic in my trading. So that's where I eventually found Urban Forex and never looked back.
Yeah. You see, like a lot of you guys actually, in a short span of time, you guys found Urban Forex and then you guys flipped your techniques. I didn't have that when I started. You see, when I started, I mastered every indicator out there because I'm, let's put it this way, as much as I am, college dropout and all that stuff, I'm not smart as the next guy, but I say I'm a hard worker. There's no doubt about that part. I'm not as smart as the next guy, but I am a very hard worker. And when I found Fibonacci the first time, like, oh, I'm going to tear this thing apart. Day and night, I put behind this thing to come to a conclusion. This is impossible. RSI, this is impossible. Stochastics, this is impossible. MACD, impossible. Then I started labeling it, these are scams. And then later I understood how it works, the price action game. And as I developed that thing, then I looked back at these indicators. I'm like, it's interesting how they work so perfectly if you understand what you're doing. But then if you understand what you're doing, you don't really need them.
Yes.
But when you do understand what you're doing and you use them, they're like, this is easy. It's nice to have them every now and then. But the sad part was the 5 years to 7 years that I was with the indicators, it felt like a casino. Sometimes it was so perfect, I would make money, and then I would start dreaming and be like, that's so easy. Imagine how much money I can make if I do this 5 times a day.
Mm-hmm.
Those 5 times a day never came.
We've all,
Never came.
yes.
Right? Into the entire 5 to 7. And then I switched from one to the next. Never. To the next strategy. Never. To the next strategy. Never. And then I started to realize, you know, when you have that self-reflection, they say your out-of-body experience, you see yourself. And I saw myself as this lazy imbecile that's looking for someone to tell me what to do rather than trying to understand, what am I doing? And that's when I started labeling indicators as tips. I'm looking for a free tip. Someone tell me what stock I should buy. Someone tell me what currency pair I should buy. How much money you want for this? $300 a month? I'll pay the $300 a month, no problem. I just have to work 20 hours more at the place where I was working at the Dairy Queen, sweeping the floors, mopping, but I'll get that $300. I'm going to join the signal service. Just tell me, what do I need to do? And that didn't work. And that was even more heartbreaking because I worked really hard for that money. So I said, screw it, doesn't matter. I tried, I know it doesn't work. Next. And next after next after next, I started to realize I'm just in the same wheel repeating. Even though I'm trying hard to figure out the answer, I'm trying in that same circular loop. So no matter what I try, I'm trying in the wrong way of thinking. Until I broke out of that thing and I said, no more tips. I am the tip now. I need to figure this out. I need to learn how to do this. I need to learn what am I dealing with. And then here we are. Here we are. And when we say here we are, talking about what, $145,000 later? Okay, one of the largest trades on the planet. Supposedly. Okay, I still don't know if that is legit or not. If it is the largest trade, let me pull up the thing if you guys want to see it. Let me pull it up here. Yeah, give me 1 second. Okay.
Any plans on closing it? Or
Actually, I reached 113 last night, but I wanted to close it all with you guys. Okay, at the end of the day, everyone, all the subscribers at Urban Forex, I'm not going to leave you guys hanging. We're going to do it together, right? Like,
Nice.
let me do this. Okay, there's my mugshot. Hold on. Is that right? Oh yeah. Okay, cool. Okay. All right, all right. So let me sorry, let me just log into my interactive brokers. 1 moment.
I wonder how many, people that's watching the webinar is also trading this right now.
Okay, here we go. Sorry about that. Okay, so currently running for $145,000 and 800. Okay, we're at 11303. Let's close some of this together. I'm going to close 3 million right here on the spot. I'm going to sell 3 mil. Market closed. Okay, so we have locked in pretty much 7,000 something dollars. I'm going to remove one of my stop losses. Okay,
You mean
and I'm gonna
70,000, right? It's not 7,000.
sorry,
Is it 7,000 or 70,000?
70. Yeah, a little over 70,000. So I wanted to wait till we're here together so we can do this together. So right now, as you can see, this thing has halved. Now I'm running for $38,163. Stops are locked in for the remaining at 217 pips. I'm expecting this thing to continue rising. But now, since I close half, I'm not going to get those $500 a day. I'm going to get around 250 a day. Okay, so the trade is still running. It's still running. Now, the trade is this right here. Okay, now I want to show you guys something. Okay, sorry, I have to draw it from here. That is exactly 50% Fibonacci. No, I'm just kidding. Get out of here, guys. All right, thanks a lot for coming in, guys. Until next time. Cheers. Bye for now.
Have a good time. Bye-bye.
Nice.
Bye-bye.
Cheers.